Today we're talking about Vizsla Silver, a company with an extremely large balance sheet, great creditors that trust this project. It is an exploration company that has taken the steps to try and develop their project. With permitting applications in place, this project is projected to start mining this productively in late 2028, 2029. And if you want to see how this project has developed from being an exploration company to a potentially new big silver development company, stay tuned and watch until the end of this video. Hey, quick disclaimer, I am not a professional advisor. The content in this video are for entertainment and educational purposes only and reflect my personal opinion. It should not be taken as financial advice or investment advice. Always do your own research and speak with a licensed financial advisor before you make any investment decisions. I may own positions in the stocks that I talk about, and when I do, I will mention that at the start of the video. This is not financial advice. This is just my personal opinion, and please do your own research before investing. Thank you. Let's get on to the video. So today we are talking about Vizsla Silver Corp, and let's just get straight into it. Today, as always, we are going to talk about the management, the project, the capital structure, the balance sheet, recent news, and my personal opinion about this project. Starting off with the management, we got the three main positions right here, the CEO, the CFO, and the VP of Exploration. Michael Connard founded Vizsla Silver in 2017 and has been the CEO ever since. Vizsla Silver was a primary company, but it split up into Vizsla Copper and Vizsla Royalties, and he is currently on the board of directors and the chairman of both of these companies. Prior to becoming involved in the gold and silver market, this man was a deal maker and a capital raiser. So he has a financial background, and you can definitely see that through this project as well. I think that's very interesting. He's also a managing partner in Venta Capital, that is an investment firm which also owns Vizsla Silver. So you can see that there is a brand that this man has built around the Vizsla name, and he has multiple companies investing in the same thing surrounding that brand. There is definitely a big thing to say in this company about their access to capital, which I think is extremely interesting. We will get into that more when we start looking at the balance sheet of this company. But prior to the Vizsla brand, he was also the co-founder of Cobalt One Energy, which was sold to Blackstone Minerals and is currently not being worked on right now. So this man's experience in the mining industry isn't as extensive as other CEOs. This man's experience is more in the capital raising side of the business. Then the CFO, we have Mahesh Lianje. He is an accountant with 20 years of experience across industries, and he has experience working for mining companies specifically in Mexico. He has worked with Orogen Royalties, which is quite a strange company at the moment. It is a holding company that holds a deal for another company. I didn't really understand the balance sheet of that company at all, so if you're interested in that, just look up the company and then look at the balance sheet. I couldn't make much out of it. He has also worked with Manic Resources, that is a resource investment company. So the deal there is that Manex invests in a junior mining exploration company, and then in return the junior miner will pay Manex for services that they do, geological surveys, technical surveys, and in that way Manex will get paid back the money that they've spent investing in the company. That is a good structure, I feel like. It definitely takes a little bit advantage of the fact that junior mining companies don't have much capital, but I think it's an interesting way to invest in this sector because there's a lot of risk, and if you can reduce that risk by getting paid from the companies that you invest in, that is of course better for the investors of the company. Then we have the VP of Exploration, Jesus Valador. So they get Jesus on the team, which means that, you know, all of these people are by default liberated of all their past and future sins. So that is always good. This man has 20 years of experience specializing in epithermal systems. Well, I will go into detail about an epithermal system, what that means and why that is important to this project going on. This man worked for Fortuna Silver Mines, which is a big silver producer in Mexico. It's a very interesting name in the industry, and if you don't know the company, just look it up. It's a pretty big mine in Mexico, and this man has managed the brownfield exploration in Mexico. Brownfield, again, is where you explore in places where there have been previous mining activities done before. This man also served as the director for First Majestic Silver, which is Keith Neumeyer's company. It is a very well-known name in the silver industry, so this man is definitely connected to big names in the silver mining space. Then moving on to the board of directors, we have Craig Perry, which is the chairman of the board. He is a founder of Vizsla Silver, so this man has been here since the beginning of the company. He is currently a lead director of Skina Resources, which is a developer, and he is currently the CEO of Vizsla Copper. So you can see that Craig is also involved with the entire Vizsla brand, being on the board here and being the CEO of Vizsla Copper. There is a big list of companies that this man has worked for, so I do assume that this man knows what he's talking about and does have the industry experience to lead the board of directors in this upcoming new mine. We have Harry Pokrant. He is the former CEO of Hive blockchain. Now, I don't know too much about crypto. I don't play in that casino. So I don't know what Hive blockchain is. Maybe somebody who does know can leave it in the comments. But I got no clue and I have no interest in looking into that. He is also the former director of Core Mining, GoldX Mining. I did another video about that, so if you want to know more about that, go look it up. BQ Metals Corp, Lithium X, and Fior Exploration. So this man has also been involved in multiple mining companies, big and small, and this man definitely has some experience as well. Then we have David Cobbold. He is a investment banker, so this is a money guy. He's currently the vice chairman of Metals and Mining Macquarie Group, where he is searching for mergers, acquisitions, and sales. So this man is definitely heavily involved in the deal-making side of the business, just like the CEO is. And having two people like that on this board does give you a lot of access to capital. Then we have Eduardo Luna. He has 40 years of deep industry experience. He is the former president of the Silver Institute and the Mexican Mining Chamber. So this man has definitely got a lot of titles. He is also the former director of Wheaton PreciousMetals and a former C-suite executive of many other companies. C-suite means CEO, CFO, COO, anything with a C in front of it. We got Suki Gill, that is a CPA, so an accountant, which is a executive member of Smith LLP, that is a Canadian-based accounting firm, and is currently also the director of Skina Resources. So you see that the chairman of this board probably brought in his own accountant to help this company out as well. In general terms, this management team has some deep connections to the industry, has great access to capital, and has a lot of experience on the board. I like seeing that, and I think that this management team is very capable of managing this entire project. Moving on to the project itself, the company owns the Panuco project, which has a feasibility study done just a couple days ago, actually. The study itself isn't out yet. They did a conference call about it, but the study has not been released. I do expect the actual study to be released in a couple months, but we definitely already have a couple of very interesting updates, which I have included in this presentation. So this project is located in Mexico. It is nearby a 27,000 people town, so that is quite a big town with a lot of skilled labor. Project is accessible by highway, and that is very good, so it's not in a remote area. The project has first been drilled in 1989, and then it was explored in 1999 and in 2001, but the data wasn't stored, so there is no historical data from that area. Later exploration commenced with about 300 drill holes between 2004 and 2008. The project has been dormant until 2019, until Vizsla Silver bought the project and drilled it with about 1,000 drill holes since. So there has been a lot of drilling and a lot of exploration done on this property, and that has resulted in a high-grade gold and silver deposit of about 2.7 grams per ton gold and 360 plus grams per ton silver, which is both very high grade, and the deposit is projected to be a underground mine. One very interesting thing to know about this project is that they do have a non-operational mill with a plate capacity, so a maximum capacity of about 500 tons per day, and as far as I can tell, they will use this mill in the future when they are going to produce gold and silver from this project itself, so they don't have to build their own mill again. They already got one, which will save them a lot of money in the future. So if we look at the location of this property, we can see that the property is located in dark green right here. They have this property as well, and there are a couple towns, and there is a highway going through the project all the way towards an airport and towards Mazatlan, which has a big port. So we can see that this project is definitely located in between cities with great access and great infrastructure already in place. Zooming into the project, we can see the claims that they own. The company owns all the claims in dark green. There is no ambiguity in the ownership. Vizsla Silver owns the claims outright with no middleman in between, and that is definitely a good thing to see. The deposit that Vizsla Silver has found on their property is a very veiny system. You can see in this image that there are a lot of veins going through their property. You can see the red lines are veins of gold and silver mineralization that the company thinks that they have. They have explored these through sampling. So that means that they go to the physical location of these veins and chip out rocks and just pick up rocks from the ground to see if those rocks have gold and silver. Well, if they have, then there is a greater possibility that there is gold and silver in the ground as well. The resource of the project is located in this area of the project. You can see that this entire property has more exploration to be done. They can explore these veins right here. They can explore this area. They can explore right there and to the upper parts of the project as well. So there is definitely a case to be made to make a smaller mine right here and then to explore the rest of the property in the future. I think that that will be the plan that the management has in place. I think that's a very smart plan. That is a very commonly used plan as well. And we will definitely see how that happens in the future. But one thing to note is that there is a lot of veiny systemizing going on in this image. And a veiny system is part of a epithermal deposit. So we saw in the management that the VP of exploration is specialized in epithermal deposits. Now, what does that mean? First of all, I am definitely not an expert. I'm not a geologist as well, so I'm not going to give you a very detailed or great explanation about this. But an epithermal deposit is made by rising groundwater that is under pressure and has taken mineralization from the magma inside the earth out to cracks in the earth to the kind of the surface. And you can see how that works. There is mineralization here in the magma that is being pressurized and is being heated so much that it comes up. So you can see that this magma is moving up and that goes through little cracks that have formed in the earth's surface. That then cools down, and because there is mineralization in there, you get veins that go through the earth with highly dense material in them. Those veins are called a porphyry. So you see in some properties that they talk about porphyry discoveries. That is the veins of cooled down magma that have come from the inside of the earth. If we look at this image, we can see the same image as we have looked at before. These are their mineral claims. This is where the deposit is laying. These are all the drill holes, the 1,000 drill holes that they have are just in this deposit. And you can see that there is a lot of drilling going on that the company has already done. And they have produced this resource right here. You can see the dark red is the extremely high grade, and that is followed by the light red, by the yellow, and then by the green, and then by the blue. So you can see that there's a lot of pockets with very high grade material in there. So the company definitely has an understanding of the deposit that they are going to work with. And this is how they plan to go and mine that. So as stated before, this is going to be an underground mine. And this is going to be mined in 2 or 3 different areas. I say 2 or 3 because it's not clear yet. In the economic assessment, they were talking about 3 different mines. And in the feasibility study that has been released a couple days ago, but is not public yet, they are talking about 2 different mines that they are going to make. But the basic principle is going to be the same. They are going to build an underground system where they are going to mine the deposit from. And from the economic assessment, you can see that these are going to be the different mines that they are going to mine. So you have 1 mine here, you have 1 mine here, and you have 1 mine here. And something very interesting as well, the company has provided the way that they are going to mine this, and they are going to mine this with a long hole stopping method. And that looks like this. So this is the mineralized zone that they have. This is the vein. This is the cooled down magma from deep down in the earth, which holds gold and silver. So this is what they conceptually target. And the way that they are going to do this is they are going to drill holes in the wall here. So you can image this as the inside of the mine. They are going to drill holes. They are going to explode some dynamite, and then they are going to take the rocks out and process them. And they are going to do that all the way to the end of that slope. And you can see that in the end, it will look something like this, where everything has been blasted out. And once they are done, they are going to fill this back up to protect the structure of the mountain that they are working in. Because remember, this area is near a close by town, so you don't want to cause disturbances to the people who live there, like earth movements, earthquakes, those kind of things. So they are taking it 1 step at a time. They mine 1 piece, then they fill it back up, then they mine another, then they fill it back up to preserve the structure of the land that they work in. The company has also provided a projected permitting timelines. We can see that not all the permits for the construction have been obtained yet. There are applications that are being sent out in Q1 of 2025, and the last applications will be sent out in Q1 2026. The company says that the runtime between sending the application and getting approval or disapproval takes about a year, and the construction period is about 18 months. So once they get all the approvals, 18 months from then, they can start producing their first gold and silver. So assuming everything is approved and everything is done in time, the first production can start in Q3 of 2028. So that is about, let's call it 3 years from now. And if they start producing gold and silver, this is going to be the economics table that they're going to work with. I'm going to point out a couple very interesting things that I've noticed. You can see that the total processed feed tons, this is the total mineralized ore that they are going to get from this project, is about double the amount of the total of waste tonnage. So that means that this company is going to mine this project very precisely. They are not going to waste a lot of money and energy moving rock that has no gold and silver in it. That is a good thing to see. That means that this property is probably going to be more profitable than it would otherwise be. You can see that the head grades for AG is silver and AU is gold are going to be pretty high. So they are going to be mining 250 grams per ton silver and 2 grams per ton gold. The gold ounces in this is not as impressive for an underground project, but also having a high grade silver component in there definitely makes this a extremely interesting mix. You can see that the company projects to mine about 95 million ounces of silver and about 775,000 ounces of gold. They will do that in approximately 9 to 10 years. Looking at the operating costs, the company projects that the costs to mine this ore for about $10.6 per ounce of silver that is coming out of the ground. They project to sell that for $35, so you can see that this property is going to be extremely profitable once it is in operations. And you can see that the initial capital investment that the company needs is only about $240 million, and then over the cost of the rest of the mine, they will need to spend about another $287 million on this property. Both of these, the initial capital and the sustaining capital, are relatively low for a project this size. We will go into the balance sheet in a second and I will show you why that is low for a company of this size. And you can see, and this is very interesting as well, that the company projects that once this mine is in operations and once the permitting is done, once the construction is done, once the gold and silver are coming out of the mine, they say that they will be paid back for their investment in 0.4 years. So that means in less than half a year, they will recoup their entire investment. That is why all of these projects are so interesting right now, because the economics of all of these projects are so favorable, especially if there is a clear plan to get the permitting done, which this company has. So all of that being said, so let's look at a potential deposit value of this company. You can see that the company projects to have about 1.6 million ounces of gold and about 200 million ounces of silver. If we put that in here with the commodity prices of today, you can see that the company has a potential buyout value at 15% of their resource for about $2.5 billion. It's going to be difficult to value this with these measurements because the company is definitely planning to get this project into production, but to keep consistency with the measurements of all of these deposits, I will use a 15% buyout value for this deposit as well. If we then look at the share structure and the market cap, we can see that the company has about 343 million shares outstanding, about 20 million options for a fully diluted share count of 363,440,000 at a current share price of $4.22. That gives this company a market cap of $1.5 billion. The biggest investor in the stock right now is Eric Sprott with about a 6.6% ownership. Insiders own 2.3% of this company, which is low, but at a market cap of this size, I do understand why that is quite a bit lower than I would expect it to be. This company is also involved in two different ETFs, the SILJ and the SIL. So if there's inflows into the ETFs, if there's more money coming into the market, the ETFs will automatically buy this stock, meaning that there is a passive bid under the stock price, and that is always good, except if there is selling of the ETF, then there is a passive outflow, which has been the case for the last couple of years, suppressing the price of a lot of these stocks. You can also see that retail investors are the biggest owners of this stock with about a 57% ownership. The big investors, the institutional investors, own about 40%, and 2.3% is left for the management. As of the 31st of June, the company had $200 million in cash on their balance sheet. They had about $5.5 million in liabilities, and they have spent over the last 3 months about $7.1 million in G&A activities. That is split up in $1.5 million for salaries, $1.5 million for professional fees, $3.5 million for share-based payments, and about $700,000 for office and administration expenses. And in comparison to that, they have spent about 17 grand in exploration costs. There is a little side note to this. The company has bought other projects for about $22 million instead of exploring the properties that the company has already owned. So there is a little detail as to why this is so low compared to the G&A expenses. But all these expenses combined means that the company has produced a net loss of about $7.2 million over the past 3 months, which means that the company burns through about $28.8 million a year, given the pace and the current state of the project. Over this period, they have issued about 44.7 million shares, diluting their shareholders for about 13%. And if we look at the exploration to G&A ratio, it's practically 100% because they have spent all their money on G&A instead of actual exploration. But I think that this number is kind of skewed because they have bought so much of the property itself instead of the actual exploration and the actual drill holes. That being said, I do think that the share-based payments, the professional fees and the salaries, and also the office and administration expenses, honestly, like everything in this G&A category is just very high. And seeing that the management of this company only owns about 2.3% of the outstanding shares, I don't understand how they are going to spend about $3.5 million giving themselves more shares, but then having the ownership of this company so low. So I don't know what happened there or what's going on there. That's definitely an interesting thing to look further at if you are going to do your own research into this company. In the same financial statement of a year ago, you can see that the company has 242 million shares outstanding. Now they have 343 million shares outstanding, which implies a yearly dilution rate of about 29.4%. And then if we plot all of these numbers into this calculation, we get the projected value of the deposit and the shares that you own. You can see that the deposit value is $2.4 billion. They have about 360 million shares outstanding right now for a share price of $4.22. with a yearly dilution rate of about 29%, and that gives a potential buyout multiple on your investment, meaning that if the company gets bought out by another company for 15% of the resource value, and if you owned the shares at that moment, you would make 1.6 times your money. That drops to about even in 3 years, and there is a projected loss in anything above that. So that means that buying this stock and buying this project right now at this current market cap is a bet that the applications for the permits will go through, that the project is going to get approved, and that they will start producing gold and silver within the next couple of years. And if they do that, the company will probably mine that profitably, and then this projection will have no further effect on the valuation of the shares. Then it's just earnings and profits. In recent events, we can see that the company has announced a couple very interesting closings. They have announced a $300 million convertible senior note offering, and that is a very long name for just saying that they have issued some debt. The company has issued $300 million worth of convertible debt that is paying the holder of that debt a 5% interest rate per year, which is in general for this industry, one, a lot of money, and two, a very low interest rate. So this company has access to a lot of money at low rates. So that means that they are trusted by financial experts in this industry. That is an extremely good sign. But because these debt instruments are convertible, they are convertible into common stocks. So once the stock price reaches $5.48 per share, that is about a 25% increase in the share price right now, the people who hold this debt can say, okay, I no longer want this debt, give me stock instead of this debt, and then the company has to issue shares. So what will happen at that point is that the holders of these instruments will probably convert it into stock and then sell the stock to recoup their debt that they have issued right now, and in the meantime they earn a 5% interest rate. So that means that there is a cap on the amount of upside potential that this stock has in the immediate short-term future. So buying this stock is definitely not a short-term play. Buying this stock is definitely a more long-term play. You want to see them build this mine, you want exploration instead of just the immediate upside, because the immediate upside is going to be limited and capped from this convertible senior note offering. Next, the company has delivered the feasibility study for this project. Well, I talked about that a little bit before. This is going to be available to the public in about 3 months or so, and at that point we will come back to the stock and look at what has changed. In other news, you can see that the company has also entered into a $200 million revolving credit facility, and a revolving credit facility is just another way to say debt, but that is debt that is more like a credit card, where you have a line of credit with an institution that you can use that whenever you want, honestly. And you pay a little bit of money just to have that line of credit open. And interestingly enough, you can see that the company that has agreed to do this credit facility is the same company that the member of the board of directors, David Cobbold, is the vice chairman of that same group. So you can see that the funders of this project are also on the board of directors here. So that signals a high level of confidence that this funding team has in this project, and I do really like to see that. Given the fact that this company has taken on all this debt in the last couple months, you will definitely see that impacting their balance sheet. The interest rates that they have to pay on this debt will be paid with investor capital, because the company right now does not have operating earnings or income yet. So if the project is delayed by any reason, this debt is definitely going to drag on the finances of this company in the future. Now, the company has a lot of cash on the balance sheet right now, so the interest expenses will not have a drag on the dilution of the shareholder itself, but it will definitely have an impact in their balance sheet. In my opinion, this company owns an increasingly rare primary silver deposit with an extremely experienced management team with relevant, successful experiences in the past. That is definitely a big plus. They have a good understanding of the deposit with a plan to mine it, although the exploration plan for what they are going to do with the proceeds of this money is still lacking. I would like to see that before they start the actual construction itself, so that you can have a conceptualized image of what this company is going to look like in about, 10 to 20 years. I always like to see that. They have great access to capital with $500+ million on their balance sheet right now, with the $200 million in cash that they already had and the $300 million in senior convertible debt that they just have issued. That's about $500 million, with another rolling credit facility for another $200 million. And all of this is issued at low rates. So they have an extremely big balance sheet with extremely low rates. That means that the creditors in this stock, in this company, are very positive about this as well. They see little risk here, and I see little risk as well. They are cashed up for construction, and they are currently just waiting on the permits to be approved. And that all pencils out to a potential production plan for late 2028, early 2029. And once they start production, they have a potential further exploration that they can do on the same property. So because they are cashed up, because there is a clear plan, there is a low gap between the potential deposit value and the market cap. So there is definitely quality here. There's definitely lower risk, but you do pay up for that in the market cap of this company. However, I do have to say that there is a high G&A spend, and that is mostly spent on management compensation. So you're definitely paying up for quality in this stock. So take that all with you when you decide whether or not to invest in this. Again, this has not been financial advice. This is just entertainment and educational purposes only. I hope that this helped you in the due diligence you do into this company. And if you've thought that this video was helpful in any way, please like the video, subscribe to the channel, and leave a comment on what you would like to see next. Thank you. See you in the next one. Bye bye.